Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The bearish pressure increased in the Thursday session for the Australian dollar, which sent the market spiralling lower and now finds support at the 60-day moving average at 67 cents. The US dollar, meanwhile, gained renewed momentum and surged to 101.95. Meanwhile, in economic data, China's April Consumer Price Index, or the CPI, showed from 0.7% year-on-year in March to 0.1% below expectations, posting its slowest pace since February 2021. The Producer Price Index, or the PPI, dropped to negative 3.6%, the lowest since May 2020. Although the economic data in Australia has remained light, next week we get an update on the Wage Price Index, the unemployment rate and also employment change. Along with that, while overseas, the US will release its retail sales, and US Federal Reserve Chairman Jerome Powell speaks on perspectives of monetary policy. Based on the technicals, we have broken down for the Australian dollar and now awaits the challenge or the close beneath this key level. Therefore, if we see a move beneath 66.85, that would reinstate the downside to this call where I see the bullish foundations holding at 65.90.95. With any advancement likely to be limited in the intraday view of 67.40 minor and 67.85. The euro took a very heavy tumble as the dollar, as I mentioned, rebounded further to 101.95. Following the inflation data in the US was slightly below expectations, indicating further evidence of a slowdown. The PPI index rose by 0.2% in April, with the annual rate slowing from 2.7% to 2.3%. The core PPI increased by 0.2% in April, showing a 3.2% rise compared to the previous year. In other reports, initial jobless claims showed an increase of 264,000, reaching its highest level since October 2021. Looking ahead, we get the US consumer confidence data, which will be released on Friday, later today that is. And based on the technicals, well, the market is now focusing on this key level of 109. A close beneath there in New York would give further indication and evidence to support the market falling further, and that is towards the region, seen at 107, and reassess from there. Technically, we are bearish, and therefore, if the dollar can break above 102, then we could see this market tumble further. Well, it would seem that the yen strength wasn't as strong on Thursday as it retreated and the dollar surged and pushing the market further towards the upside of 134. Looking at currently, we are still negative, but I would feel in terms of a break of 135.0515 would increase the momentum on towards the region of 136. I do feel that we are forming a strong base here, which would eventually see a rise up towards the area of 136 to 138. Sterling, well, as widely expected, the Bank of England hiked rates 25 basis points to 4.5%. Now eyes look to the UK gross domestic product, which is the GDP, and I'll see if this market can continue on its slide. We got two dojis and also a shooting star, which clarifies that the market found a top here around that 126. So the bears are moving in and therefore looks towards the region of 124.80 and down towards the area of 123.85 as a potential target and reassess from there. Having taken another topside challenge, the bears moved in heavily around that 2038 level and gold rejected strongly and now posts a weaker signal into today's price action. That gives further indication that we could see a move down towards the region of 1,994 to 96. Still keep in mind that we could actually even see a fall further, that is towards 1,978 to 84. Any upside attempts should be limited with a resistance now seen at 2,026 to 28. Having stretched its rally all the way for 4 days, the market's taken a tumble now and reversed from the target of $74. And now looks back towards the region of 69, 80, 90 as a potential target. So I feel just bringing this down here that we could see a little bit of a strong bounce from this level, maybe a correction back to 74 again. Overall though, the upside or the strength has been negated for now, and now looking for a bear case in the short term. Well, that's a wrap for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoyed a great start to the new weekend.